Good evening. It's Vijay here. Today is Sunday, 8 December 2024. Welcome to yet another episode of Weekend Musings. Here, I will just discuss about some concepts rather than what happened exactly in the market on a day-to-day basis, which I will take it up tomorrow. Friday has come and gone with the RBI policy as expected, but that we'll discuss it tomorrow. Today I want to discuss some things about, is it the wrong time to enter the market? Normally we ask ourselves, is it the right time to enter the market when the markets are, let's say, bubbling, and then people begin to question that hypothesis. Is it the right time to enter the market? Today we are in a very strange situation. We are in a situation where most of the pundits who are coming on TV are talking about the markets being highly overvalued, and some of the pundits who are managing PMSs are planning to go into 80% cash in their PMSs. The mutual fund managers who are collecting money left, right, and center are talking of having a very high component of cash. Normally, they have about 5%. Some of them are having 20, 25, 30. So the atmosphere is very strange. You see, if you talk to somebody on the street, if they've invested in the last 6, 8 months, they would have lost money in many stocks. Yet the markets have not gone down and stayed down. They've gone down. They have not stayed down for a very long time. In fact, Nifty was down about 11% last month, but it has bounced back. Bank Nifty is close to about 2% away from its all-time high. So there is a lot of confusion as to what is happening in the market. So let us try to understand it by what can happen in the future. So if you really look at, as I said, if you look at what these bearish characters are, everybody is now coming around and saying, this is the top, that is the top, tomorrow is the top, next week is the top has already happened. And that is the kind of, messages you get, which will be confusing for some people and saying, is it the wrong time to enter the market? So let us look at something here. This is the HDFC Bank. HDFC Bank was the meme stock for a very long time. So it was supposed to hit a top sometime in a few months ago. Then it hit what they called a double top, and people got scared. And now you see it has gone above that, and now it is trading significantly above the previous top levels. These are the two levels, and it is trading above that. Very rarely I have seen any stock which breaks out like this will come back to this level. This is the level, I'm talking the bottom end of the band, that is around 1600. So it's very 1725. That's very unlikely that it will come to 1725 now. 1800 approximately was the top end of the band. Now it's about 1860. It's very unlikely it will come there. And believe me, HDFC Bank was considered as one of those losers in this market because it was not going anywhere, especially after the merger with the HDFC. So now, where are we? I mean, if we are here, then why should we be worried about the top? I mean, already these tops have been crossed, and now a long consolidation is taking place. So there should be some more distance up. And if HDFC Bank, which is the number one in weightage in Nifty, is going to go get stronger, then why should we bother too much about the naysayers who talk of a top here, top there? Then this is about this was the IT index. IT index again was very hated index, and you see it is consolidated for a very long time, and then it has taken off from the previous highs, and now it has made an all-time high just day before yesterday. Now, so you got HDFC Bank, now you got IT index. Again, IT index is hovering around the top. Then you look at this. This is the mid cap index. Sorry, this is a small cap index. So small cap index, people said, is very, very overbought, which I also thought at one point of time. It fell down during the June 4th levels. Then it crossed that high, and it struggled for some time here, and then it just collapsed. But again, it bounced back, again came down, and it made what we call a lower top, lower bottom. So when it came here, people thought now the story is over. The small cap, lot of froth was there. Now, lo and behold, it is now trying to hit a top again. Normally, this kind of behavior is very rare in a bear market or in a frothy market. This market, whether we like it or not, whether we like the small cap indexes or not, something else is happening here. Something else. So there is such a hurry to go up. Now, you may say it's a hurry to go up so that the bears will come out and hammer the market. Right now, the indications are clearly that however much you push, whether you talk of lower high, lower bottom, lower high and lower bottom, yet the prices are defying. So there is no point in fighting the prices. Now take the micro cap index. Micro cap index is somewhat similar to the pattern, is somewhat similar to the small cap, but micro cap index has hit a all-time high yesterday on Friday. So you look at the pattern. Again, the pattern is telling us even if you, in fact, it did not make a lower bottom, it made a the same bottom, but it made a lower top. Now it has crossed that. If you are a good technical analyst, you should understand that something else is happening here. You cannot expect now it to be a double top because there was a double top already. Now you're talking about triple top. It looks very, very unlikely if you simply see it from where where we are today. Now this blue line is what is indicating on the June 4th when everything had collapsed, but subsequently the microcap index has been one of the strongest indices. Now I'll something interesting here. This is something to do with Reliance. Reliance Industries today is the third weighted heavyweight in the index on the Nifty. Previously, Reliance was number two. Now it has become number three. Now, after when it hit that high, subsequent that was about 3,200 as far as the pre-bonus is concerned, so around 1,600 here. It dropped to about 25%. Very rarely has Reliance dropped 25% in a moderate market. See, this is a bull market which was accompanied by volatility. Let's say we call it a moderate market. In a moderate market, very rarely it comes down to 25%. Now, interesting information available on the market is that the outstanding open interest outstanding is the highest ever in the last 18 years. From 2006 data, people have calculated and said this is the highest ever. Now, open interest is both long as well as short. So now whether bears are sitting there or bulls are sitting there, how do we find that out? We can find that out only with the price action. Now the price action is clearly on the downside, so 25% lower. Now the news is now coming out slowly that it is the highest. They have kept on building shorts. So you are seeing every rally has been beaten down by Reliance. Reliance results were good. They were not that bad. And Reliance is now entering into solar power. And in this year, they are planning to complete 20 gigawatt of power. They are going to have an installed base. Now, Wari Energy, which is now the darling in solar power, they are having about 12 to 14 gigawatt. So already Reliance is having more than Wari, but Wari is having a PE of some 100 and odd. If somebody says no, Reliance is a holding company. I do not know what that logic of holding company is because Reliance is a company. Basically, it is into oil and gas. Then they have diversified into retail. They have diversified into geofinance, and so okay, it is their divisions may be having there, but core business is there. A holding company means it doesn't have any core business, it only has other businesses which are part of that business. But Reliance Industries has been oil and gas major into energy since 3-4 decades. It was there in textiles, backward integrated, and that's all part of Reliance Industries. So I do not know how people are classifying it as a holding company and therefore a holding company discount, and therefore Reliance prices should not go up. I think that logic, at least it doesn't sound proper for me. And the bears are sleeping. The market, the Reliance has already gone up 9%, and all it needs is a trigger. And I think the trigger will come on December 26th, Dhirubhai Ambani's birthday, and invariably something good gets announced around that time. And I think something good will get announced in Reliance at that time. Incidentally, we hold Reliance. And please note, I'm not a SEBI-registered advisor. I'm looking here at charts and I'm talking about it. Now, just take this, what happened in 2020. The market, Reliance had taken off, and then the continuous selling was there in Reliance because the market was being led by Reliance. It was going down. Suddenly, in 2 days' time, the event then was Mubadala and other companies investing into Reliance. And suddenly it took off about 10% within 2 days. Normally, Reliance kind of companies don't go up like that, but it did because of an event. And there was a trigger because that was the trigger. But prior to that, Reliance was continuously getting hammered, a lot of volatility during that time. This was 2020. Now, let's look at something else. The Nifty. When the NDA second term came in 2019, because the budget was not great, there was a lot of short positions built into Nifty, and continuously, if you see, Nifty was being hammered, and then it stopped getting hammered. Same thing if you look at Reliance, for instance. Here, if you take here, see Reliance, after some time it stopped getting hammered. It was just stuck in a narrow range, and then it has taken off slowly. Now that's what happened in case of Nifty in 2019. And then Nirmala Sitharaman came and announced the corporate tax reduction, and within 2 days, the Nifty went up by 8%. Of course, the overall market was not great, so therefore it fell down after that. So even if you assume that Reliance is not great company, you will get a short squeeze. I expect you will get a short squeeze. The probability is high. I won't say it will happen, but the probability is very high. And that is why we have bought into Reliance, not only because we are expecting a short squeeze, but also because fundamentally, I think it is not as bad as what the market men are making it out to be. Finally, I would like to show you an interesting chart here. Day before yesterday, on Thursday, not Friday, on Thursday, there was huge volatility in the market, and people were all scared that about 1,000 point move was there overall, 300 points up, 300 point down, that kind of a move was there. So the range was not much. The range was only about 300 points, but three times moving 300 points is 1,000 points. So I went back to many years ago. So is this something very unusual? It was not unusual in 2007, for instance. In 2007, between October and December of 2007, on a daily chart, there were 14 instances where the range was 4%. Now, 4% in today's time means 1,000 points. Now, we have not seen a 1,000 point range in the last so many weeks. We have hardly seen a 1,000 point range. I don't think we have seen a 1,000 point range in months, or maybe I don't recollect any time. But we are talking of a 1,000 point range in a day. 4% is 1,000 point. 1,000 point range for 14 weeks in 14 episodes of 1,000 points in those 14 weeks. So we have seen enormous amount of volatility in a bull market, where sometimes the bulls took it up, sometimes the bears brought it down. You again, we had during the day, intraday moves up and down. If you look at point number 9, and then if you take 10, 10 is fully bullish. If you take, say, 4, 4 was very bearish, then it bounced back, bulls fought back. 5, bulls took it up, but bears ruled the roost. Or if you take 12, bears took it down, but bulls brought back. 13. So if you look at these numbers, this volatility was so severe, yet the markets went up. So just because there is volatility, it doesn't mean the market will go down. Many a time it goes up. This is a classic case in 2007 where 14 such instances happened, and yet the market went up. So what I'm trying to say is here, my understanding of the market is like this, that there are so many things happening in the market which are conducive for further rise. If you look at global markets also, they are conducive for a further rise. So some things are falling into place. Even the Israel-Iran war has gone into the background. There seems to be some peace talks between Russia and Ukraine in the offing, because Trump is pushing that. Also, the Fed is reducing their interest rates in the next 10 days. So is the ECB doing it. RBI has reduced the CRR, which means liquidity is coming. Government of India is talking about, increasing further money into infrastructure. You have the wedding season, which is doing very well. Automobile numbers are very good. So all these are indicative. And then you've got HDFC Bank, which has made a new high. Microcap index has made a new high. Reliance seems to be a short covering rally, which is a short squeezes in the offing. And December is generally a month where it's a cheerful month for the bulls. With all this in mind, if people keep telling us that every day this is the top, tomorrow is the top, next week is the top, last week was the top, I do not know how to reconcile that. I don't know what their logic is. I have presented my logic. I hope you appreciate my logic. Thank you for joining me. Have a good evening.